In this video, I'll walk you through how to prepare your T1 tax returns. Your T1 tax returns are a mandatory return that you as individual or a self-employed person need to prepare at the end of the financial year. So these returns are due by the April 30th of the next year, and people tend to struggle with preparing these tax returns. So in this video, I'll walk you through the paper tax filings and what you have to do as an individual preparing these returns. So just come with me. By the way, my name is Stanley DK, and I hope to give you as much value as possible. And just like and share this video with somebody that you know will need it. So without further ado, let's jump right into it. So we're here on the T1 tax form, and this form, you can get it on the CRA website. I'll put a link for you to access it, and this form varies by province, right? Because different provinces calculate their taxes in different ways, right? And then you come to the first part of the form, you have to fill your name and address, very straightforward, and you have to include your social insurance number because this is what is used to tie the returns to yourself, right? And so you should not be scared of keeping your social insurance number on this form. And it's very important to correctly identify your status here. Are you single, married, living, common law, widowed, divorced, or separated? Because based on these answers, you might qualify for some benefits that are due to people, for instance, that are married or have a common law partner, right? And then you have your residence information. You have to provide the province or territory you were on 31st of December. This is necessary to calculate your income taxes for the year. So you have to put the right information here. And your current, so wherever you are on 31st of December is where you're supposed to, that's the basis of your income tax return. So if you're in Ontario on 31st of December, then you should be filing your returns in Ontario, pretty much. So then if you had a PE, as a permanent establishment, in 2023, you just have to put all the information here so that the CRA can properly identify who you are and where you stayed and if your returns are filed in the right place, right? Then if you have a spouse or a common law partner, you have to put the information here as well. And I would say that you should not be scared of putting information here because the TRA needs to tie this to your SIN is what the TRA ties to every individual that is a resident of Canada. So you have to your information, your full information here, right? And so let's go down here. There are a lot of information on this form, but I will try to summarize those that you don't need to know because I want to make this video short and so that I can have a good idea. I'll do a deeper dive subsequently. So most of this information here might not relate to you, the Indian Acts, unless you are from this territory, but you don't have to go here. The Climate Action Incentive Payment. So there is some sort of payment that you get from CRA if you reside in any of these provinces or these areas. So be sure to tick it. Then if you have a foreign property that is over $100,000, you need to indicate it here because there are certain forms you need to fill and submit. They are called information returns that you have to submit. It's called the T1135. When you have more than 100,000 foreign property or income somewhere else, you need to fill this. So that's very important. And you have to, if you want CRA to share information for tissue and organ registry, you like to be a donor, then feel free to include yes here or otherwise put no. So that's just a preliminary part of this form. And I will go now into the total income. Now, as a resident of Canada, you are taxable on all your income, right? You just need to know exactly what income you collected is, and I'm very sure to fit into one of these boxes. So now if you have an employment income, please indicate it there. There are a few income that are exempt in Canada, which are like the emergency service volunteers or tax exempt income. Most of the income here are really taxable in Canada. So you just have to look through all these boxes, So if you had an other employment income, maybe you have a side hustle, a side job that pays you, you need to include that as well. Then you have your old age security. Maybe you made some income from that, you have to include it. So carefully go through everything here. I don't want to bore you with all these details because they could be very technical, right? If you have interest and other investment income, from your stocks, wherever they are, you have to put them in here. Partnership income, if you have a RDSP, put them here. If you make rental income, like you rented your BQ or your boys' quarters, you have to put it in there, or some room in your house, right? Then if you have some income from your RRSP, include that. If you made income on your FHSA, you have to include it. So
pretty much any income that you've made in Canada falls under here. Now, this is a special aspect of this fund, which is self-employment income. A good number of us have business income from maybe a side hustle, which is not a corporation, or a professional income. Maybe you render consulting services, but this is registered under your name as a sole proprietor. You need to include everything here. Or you make some commission or affiliate income. You need to include everything right here. And this whole area houses all the income you made in the year. So take your time, go through all this, and if you have questions about what income you earn and what it classifies, what it really is, you need to speak to a tax consultant or book a time on my calendar and we can talk more about it. So moving on, then you have your deductions, right? That come in. So for instance, if you have RSP deductions, RSP allows you to, like a registered retirement service plan, you have a certain percentage that is deducted from your current year salary earnings, rather, which will be, so your RRSP deduction is about 18% of your total income from the prior year. The higher of 18%, no, let me come to that again. It's 18% of your prior year total income. So you have that in the next year as an RRSP deduction. But the maximum limit you can claim is about 30,780. So pretty much 18% of all you earn in your previous year, you can get a deduction for that in RRSP, and they allow you to put that money and invest it, and you can save it somewhere, and you can contribute towards your retirement. Then you have your first home savers account deduction, which is when you buy a house, it has a limit every year of about 7 to 8 grand. I don't know what the limit is for this year. So you have, when you are saving towards buying your first home, you're allowed to take a deduction for your FHSA. And there are other things here. So this is just like to encourage you to save. So when they are calculating your taxes for the year, they allow you to take that as a deduction, right? And there are other things here like your union due receipts. So when you have suffered some of all these expenses, you've incurred these expenses, the CRA allows you to get a deduction for that. So if you're not sure of whether an expense is deductible for you, you probably need to speak to your tax consultant or reach out to me and I'll be able to provide more clarity for you on that. So this box, 23,400, adjusts your total income, right? And allows you to take all your deductions in arriving at the income that will be taxable, right? And so we come to this page, which brings forward this, the taxable income on this line. So this also then includes things like losses. So if you've had losses in prior years, non-capital losses, you can bring them over here. If you have net capital losses, so if you disposed an item and you made a loss, so instead of having like a capital gain, you had a capital loss, you can take that deduction here as well. Then there are deductions for not resident deductions and capital gain deductions that you have, that if you incurred any of all these losses, you can actually put it on this form and reduce your taxable income. And then you have your federal tax. So your federal tax could be a bit complicated, but your first tax band is about 15%, right? And it's graduated pay scale, which is pay as you earn. So the more you earn, you are taxed on each level. So for instance, if you are earning between 26,000 and 53,359, you are taxed on 15%. Then the next level of your earnings, which is between 53,359 and 106,717, you are taxed 20.5, and then it's just graduated. That's why it's a pay as you earn scheme. So the more you earn, the more you will pay. So you can do this calculation manually, but if you're using a software, it is easily done for you, right? So just for you to understand it on paper, then there is the federal non-refundable tax credit. Now, non-refundable tax credits are credits that when you apply them to your income, right, they can reduce your income to zero, but you cannot get a cash refund if you become in a negative position. Take for instance that I have a what do you call it? I have a taxable income of $10, and then I have a tax credit of $15, right? The maximum I can get on my non-refundable tax credit is 10. So that five, I have to move it forward to the next year. I cannot cash out that $5 because of the CRA is owing me. That's the difference between a non-refundable and refundable tax credit. So, and there are some non-refundable tax credits that the CRA gives to you, right? Which is, for instance, the basic, the age, this will depend on your age, and their criteria. So, for instance, if you look at this, it tells you the amount in line 23, 600, which is 165 or 430 or less, you can get a whole 15K, right? And if it's more, it's reduced. So it's just trying to let you know that the lower your income, right, the more credit you get. But if your income is higher, then you have less credit that is given to you. And the same thing with age. Age amounts is for people that were born 1958 or earlier. They have some sort of credit given to them, which is the maximum credit is 18,396, right? And you have your spouse or common law partner. If you have a spouse common law partner, you have some sort of credit given to you. And if you have an eligible dependent, you have a caregiver. So this highlights all the credits, the non-refundable credits from the federal. There are a whole lot of them. There's an employment amount, there's a home buyer's amount, home accessibility expenses. So you need to look through these credits and look for the ones that you qualify for, right? If you are disabled, you might qualify for a credit. If you have an interest on your student loans, there are credits that are applicable to you. So this credit, they have a basic amount, and pretty much the credit on this is 15% on those amounts, right? That's for you to know what credit you qualify for, right? And so you have to go through all these credits. If you have tuition, education, and textbook money you've incurred on this, you get a credit for all that. But this credit, they have their guides you have to look at, which could be complicated, and there are schedules you have to fill, right, to be able to account for this credit that you're claiming, right? But it's pretty straightforward if you are pretty new in the country and you've not really dabbled into any of all these things yet. But if not, you can still have a good idea of them, because this form shows you either the guide you have to fill or the forms you have to complete. So, and you can get everything readily on the CRA website, right? So let's keep on going, right? And then there's something called tax on split income. This is really for complicated, this is a more complicated tax filing, but I'll provide more insight on this in subsequent videos, but I'm trying to make this as simple as possible. Then if you had a dividend tax credit, you need to account for everything here. So feel free, take your time and go through all these parts of the form for you to know what credit you qualify for, and ensure that you don't miss out on any of all these credits. And investment tax credit too, like if you made an investment, there's some credit that you get, and there's some forms you have to fill. So pay attention to the forms that are written alongside with those tax credits, and anything that's included for you. You need to either go and Google it up and to pop up on the CRA website, and you can get those forms, fill those forms, and you are good to go. And so it's possible that you could be in a refund position, and these are things that can put you in refund position. CPP contributions, if you make CPP contributions as a self-employed person, employment insurance premiums, social benefit repayment amount, and these things put you in a refund position. Then total income tax, you have EI, overpayment, refundable medical expenses. This pretty much calculates all that you are qualified for, which is a refund that maybe expenses you incurred, and the CRA wants to give those expenses back to you. So when you finish filling out all this information, you come to the refund or balance owing, and that is just pretty much everything you need to know about your tax filings. And when you are done with this, you have the donations to Ontario Opportunity Fund. So just go through all the lines, one line by line, but they're not so intimidating. But nobody actually qualifies for every line by line thing here. So you just have to look at what you qualify for, and if there's something you qualify for, you can Google it. And when you Google it, you can see if you have to provide the information you have to provide. If you're fine with everything, then you sign up, sign here that you're good with it, and that's just about it for your tax filing. So I don't know if you have any other questions on this. I just want to walk through this whole tax filing process, and is Could be very straightforward, complicated, depending on the complexity of your tax filings and the things you're doing and the investments you did during the year and the income streams you had and the things you qualify for pretty much. So if you have any questions about how to prepare your tax returns, just feel free to reach out to me, drop me a comment, like this video, share, and I'll see you very soon. Take care.